You are listening to chartingwealth.com for Tuesday, the 11th of September, 2018. I want to thank everyone for ordering the books over the last many weeks. We just finished our 5th printing sales. We're going into the 6th printing now. Got all sorts of books and traders' journals out today. We also, if you ordered a book recently and you have not yet seen your copy of the short chart trading training that we have prepared for you, we just sent them out a few minutes ago. If you bought the book over the weekend in just the last few days and haven't seen that training yet, it just went out. Now, if you don't see it in your inbox, then you need to search in your spam for chartingwealth1@gmail.com. That is what it came from. So search that out before writing us and telling us you didn't get it, because I did send it. I double-checked, triple-checked. We sent it out to everybody. If there's a bounce back or a wrong email, we'll sure fix it and get it out to you. And there's a couple of you who wrote that you were traveling and ask if you could purchase it later. And yes, I have your names and I will honor that. The rest of you who would like to have the book, please go ahead, buy it. You'll see the links in all the show notes, whether you're listening on YouTube, Facebook, at our website, chartingwealth.com, look in the show notes, or if you're listening on iTunes to a podcast, you'll see in the show notes the link to purchasing the book, Charting Your Way to Wealth, that explains everything we do. Let's jump into these markets. Our daily market review starts now. We see that stocks are up for the day, 20-year bonds are up for the day, and gold is down. Okay, let's jump into the weekly chart, see what we see. It looks like things could be topping off as we enter into the fall-winter trading zone. We'll see. We're into our second week of a red candle. Now, it's not a strong red down candle. It's a red open box candle, as was this past week's. We see that the derivative oscillator is losing energy. The price percent oscillator is actually headed down. And again, drawing another red open box candle. Now, that's not as strong as a solid red candle. Could be showing, though, that we're having some topping occurring. Of course, we had a 2-day crossover going down on Friday for that 2-day period, first day of the latest 2-day candle. It is a green candle because there was a little bit of up movement, 0.17%, but that derivative oscillator is hammering down, and the derivative oscillator is actually losing lots of energy. Hasn't gone red yet. We like to see that happen at the same time of the crossing, but the price percent oscillator is hammering down. Look at the 4-hour chart. What do we see? Well, we saw things pretty much level out after a big down drop in the morning on Friday. Things leveled out, up some on Friday afternoon, up some on Monday morning, and then burning a little bit of that off in the afternoon with the red spinning top, meaning indecision tending down almost to doji, and the price percent oscillator still heading down. Derivative oscillator losing downward momentum, but still negative. So we'll keep an eye on things. We don't have a trade right now because the 2-day is down and the weekly is up. But we'll watch and see what we see and keep you posted. Okay, going to go from the S&P 500 to the NASDAQ 100, up 0.34%, so about 1/3% up for the day. Although when we look at our weekly chart, we can see that we are now entering the territory of a crossover. Now, it could pull back, and we don't call it a weekly vertical crossover until the week is ended, but it's looking that way. Now, this can pull back easily, though, if there's a lot of up movement over the course of the rest of the week. Derivative oscillator is still positive. However, the price percent oscillator does appear to be crossing over, and we see that we have a solid red down candle. So again, seeing some greater price movement pressure down on the Qs than we saw on the S&P 500. On that 2-day chart, we see that we're 2.5 2-day candle, so that's 5 days into pretty strong down moves. We had that 2-day crossover back on Friday. Now this first day of the latest 2-day candle, we've seen the derivative oscillator finally go red. Price percent oscillators heading down strongly, and again, another solid red down candle forming. Even with that up movement, remember, these are Heikin Ashi candlesticks. These aren't your standard high open, low close. They're measured differently. We've had, 80-something thousand, maybe 90,000 people now take our training online on Heikin Ashi candlesticks. Look it up. It's the #1 in the world. Heikin Ashi, Heikien-ASHI. You can find it at the website, chartingwealth.com, and at our YouTube channel. And you can just search it and you'll find it because we're number one. Okay, let's go to the 4-hour chart, and I'm proud of that. I worked hard on that and to share that information with you. And a lot of people have really appreciated it, and it's nice to see things appreciated when you do all this for free. Okay, what do we see going on the 4-hour chart? Well, it looks like things may be bottoming out there. Derivative oscillators losing downward momentum. Price percent oscillator still heading down, but price movement sliding sideways. Is it just sort of digesting those losses and getting ready to move down again? It could, because we just had that 2-day crossover back on Friday. So we'll keep our eye on things, see what we see. Some up movement in the morning, down movement in the afternoon. Like we said, overall 0.34% up for the day. So we'll keep our eye on things. Just remember, again, 2 days in a confirmed up, confirmed down move. Weekly's in a confirmed up move. We don't have a trade on the cues yet. We'll continue to watch and see what we see. Maybe this whole thing's topping off and the market's getting ready to chug down during the fall-winter trading zone for a while. We'll see. Until we have confirmation so we can trend follow accurately, we won't just jump in hoping. That's called gambling. That's not called investing or trading. And again, remember, we're not a stock calling service. We're an education firm. We want you to train with us, and then once you get good and apply all the knowledge you've learned over all these years and all your experience, you can make up your own mind. Let's go to TLT, 20-year bonds. Of course, going into what looks like the third week of down movement so far, looks like we might also be crossing over going down on bonds. Derivative oscillators going into its second week of down movements. Perhaps at the end of this week, we can call a confirmed weekly vertical crossover going down. Don't have it yet because it's just potentially starting. But again, bonds also, like these other charts, up for the day 0.37%. Now again, we're a confirmed up move on the weekly. We go from the weekly to the 2-day. What's going on the 2-day chart? Well, it's a confirmed down move going into the third. This is 2.5 down candles, 5 days of down movement. Derivative oscillator gaining downward momentum. Price percent oscillator heading down pretty strongly. That 4-hour chart, what do we see? Maybe it's bottoming out a little bit. It's still, the price percent oscillator still negative. Derivative oscillator losing downward momentum, but still negative. We'll keep our eye on things and see if it's just settling out or where things are really going. But we don't have a trade until the weekly and the 2-day are moving in the same direction. You guys know that if you've read the book or studied with us for any amount of time. We'll continue to watch. And what I'm getting excited about is the potential of at least 2 weekly vertical crossovers, which means, of course, the opportunity to use our second way of trading. That is, after a weekly vertical crossover on a Friday, we then look to jump in that direction on Monday. So we'll wait and see what we see, my friends. That's where we are on 20-year bonds. Back to the weekly chart. And lastly, we go to gold. Now, gold looks like it might be trying to resume its downward march. It has been sliding sideways, up for 2 weeks, now down for 2 weeks, or starting on 2 weeks. But the derivative oscillator is losing downward momentum, and the price percent oscillator slowly started moving up, even though it was a down day. Gold 0.07% down. We'll continue to watch, see what we see. If gold's just literally digesting these losses, getting ready to move down again, my friends, the charts will tell us what's going on the 2-day chart. Well, it crossed over going up back on the 24th, went up for a few candles, then sideways and down pretty much for the last few candles. But the derivative oscillator still positive, losing upward momentum. Price percent oscillator heading up. So we're really seeing a sideways slide here. We go from the 2-day to the 4-hour. And what do we see going on there? Well, gold again, we can see that sideways slippage. Gold is still negative on that 4-hour as far as the price percent oscillator goes, and the derivative oscillator, and up a little bit in the morning, down in the afternoon, down for the day. So again, we'll wait and see how this settles out when the 2 days going one direction and the weekly another. We don't have a trade, so we'll just watch and wait and see. Man, we got some interesting things setting up and some good trades, I feel like, coming up in the future if all that movement is confirmed by the charts and we start having weekly vertical crossovers. You know how good they are. That's where we are, folks, as we end the day on Monday, go into Tuesday, the 11th of September, which happens to be my birthday. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.